Hey, everybody. Welcome back to another episode of the REDX podcast. Is the mic too loud? Am I speaking?
No, you're good.
That sounded too loud. I'm too energetic for today. I think that's what's going on. This is episode 227. We were looking that up before we started today. So that's pretty exciting. I'm Tyler. I'll be the host today. And with me, we have a pretty cool guest with us here today. Tommy, a buddy of mine. Tommy Thornburgh, thank you for being with us today, man.
Of course. Thanks for having me. I appreciate you. I'm excited about it.
So what will you give us a quick intro, Tommy, of who you are and what Prime Corporate Solutions does? And then I'm going to tell everybody why this is kind of a special edition of our podcast today.
Cool. Yeah, I'm happy to do so. I always love working in real estate, anything, because it goes all the way back. I'm going to take you all the way back to when I was a kiddo here, when my parents split when I was really young. And my mom was a real estate agent. My dad owned a real estate brokerage. And I joked that the only thing they ever agreed upon was that their kids should be self-employed. So I was born and bred in real estate and brought up to this self-employed world that I work with a lot of real estate investors. And it's funny how life comes full circle. But I'm the president over here at Prime Corporate. We've been in business for 10 years, and we've actually helped over 150,000 entrepreneurs structure their business at this point. So it's been a cool run.
That is awesome. And today, like I said, it's kind of a special episode. And it was time sensitive. When we were talking about getting you on here, we were like, there's a deadline. Like we can't do this any later than the beginning of March here because we're going to talk a little bit about taxes and that's got a deadline coming up here for most of us here in the next 6 weeks. So this was really good timing to have you on here, and we're excited. The vast majority of the listeners to our podcast, Tommy, are real estate professionals, real estate investors, and then obviously a mixture of the both. Obviously, for most of us that are in real estate, we're also investing in real estate, and so it's important that where we're 1099, time really is money. We've got to know how to keep as much of that money in our pocket as possible, rather than pay that in taxes. So will you help us understand what Prime Corporate does in terms of tax, right? Because there's a few things that you guys do that we'll get to, but specifically to taxes, just give us a rundown of what you do. And then I've got some questions and maybe you've got just some good tips and tricks for our listeners here today.
Cool. That sounds great. I would argue that this is probably the least exciting podcast out of 227, but one of the most important, right? And I always say no one cares about your money more than you do. And if there's two recommendations for everybody when it comes to taxes at a very simplistic level, the first is you have to have a way to track and organize your expenses. The best way to beat the IRS is death by 1,000 paper cuts. Tyler, what did you eat for lunch last Tuesday, right? You don't know? Was it?
No, I can't even remember what I ate for lunch today, Tommy.
Was it business related? You don't know. So if you have a way to track your expenses, whether it's an Excel spreadsheet, QuickBooks, an actual bookkeeper, even down to like a designated credit card that are business related expenses, it'll save you thousands, if not tens of thousands of dollars at the end of the year. So that's number one that I think is most important. Number two, hire a professional. Sometimes getting an outside opinion. You as real estate professionals, especially agents, know the importance of somebody representing you. And it's the same thing from a tax standpoint to get that outside look in at your own overall picture.
So I'm with you on both of these things, and I'm certainly not an accountant. I'm not a tax professional, but having done my taxes and had people do my taxes, some of the things that you're saying, some people are going to go, "Oh yeah, I do that," or "I knew that." But surprisingly, there's a ton of people that some of these things, even like separating your bank accounts, not using your personal bank account for business expenses, some of that's new for people, right? Like some people get into the industry and they just don't know what they don't know. And how painful is that come tax season for those people that don't understand some of those basic, simple principles?
You're playing a guessing game at that point. In a lot of cases, you're probably lying about your expenses, let alone leaving a lot of money on the table. If there was if you could split the year up into quarters and just go quarter 1, 2, 3, and 4, for individuals that are self-employed, and the majority of this audience, the fourth quarter of the year for a lot of you should feel like a business shopping spree, right? You should know what your P&L looks like, what your profit and loss is going into the fourth quarter, so that you can make the decision if it makes sense to invest into more real estate, or if it makes sense to double down on your marketing, or any investments that you need to make. The catch-22 about the IRS and the tax code in general is it's use it or lose it. If you don't reinvest back into your business and you're not aware of your numbers, you're going to end up giving Uncle Sam a pretty penny.
Yeah, and that's hugely important. I mean, you mentioned tracking and organizing the expenses, right? There's a lot of times where that Q4, you've got to spend $50,000 either way, right? It could be you maybe you go buy a new vehicle for your business, or you go invest in new equipment, or you go invest in more real estate or whatever. Or that $50,000 come January 1st is going to belong to the IRS. And so one way or the other, it's like, if you're not tracking and knowing that money's got to go out of pocket, it might as well go in a way that benefits you. Is that a fair way of saying that?
I 100% agree. I think what's really fun for real estate investors in general to understand this is the more that you can talk to your clientele about some of these things as well. If I didn't understand taxes the way that I have over the last 10 years, I don't know if I would have purchased any additional real estate, but I've purchased real estate with the sole intention of saving money now through cost segregation studies, accelerated depreciation, and I'm doing it to actively save money on taxes. And it just happens to be building a long-term legacy and long-term wealth of residual income. If you can do that for yourself, amazing. If you can help your clients and help other people understand how big of a benefit that can be, what doors does that open for you as an agent or as a broker working with other investors as well?
So can we talk for just a little bit about entities, right? Sure. Because nearly every real estate professional, they're running their business through an entity, through a legal entity, whether it's a proprietorship or an LLC or a corporation. If somebody's getting into the real estate space, either as a professional or as an investor, where would you direct them, or what advice would you give in terms of which entity is best for what you're trying to accomplish?
Yeah, great question. I'm a firm believer that everyone in the US should be self-employed to some extent, whether it's side hustle, side business, full-time self-employment. And the reason that I say it is the tax code really benefits investors and entrepreneurs, right? There's no tax code that says you have to be good at business, or there'd be no businesses.
Amen.
But there is a tax code that says if you show the intent to generate income, then you can take business related expenses. So a lot of people start under their name, or they start under a sole proprietor, a general partnership, like you mentioned. The reason I don't recommend that to anybody is there's no asset protection and there's very limited tax benefits. So if you're just getting started, at the very least, why not have an LLC? Some states, they may ask you for a PLLC, which is just a professional liability company. But the reason that I love LLCs is they give you flexibility. So when you're first getting started, it's a way for you to write off startup expenses, educational expenses, organizational expenses, and maximize on your taxes. But then once you're making $50,000 to $100,000 or more, we usually say, you can simply change that LLC so that it's taxed as an S corp, and that's going to allow you to pay yourself a salary or a distribution, and it's also going to allow you to avoid half of your self-employment tax, which is Medicare, Social Security, which saves you 7 to 8%. If I know anything about real estate agents and brokers, you'll find a better place for $7,000 on 100 than Uncle Sam's pocket. So LLCs are a great benefit that way.
Yeah, and a lot of people in our audience, right? We've got some people coming in that are brand new in the industry, and so this is good. This is excellent for them to know, right? And it's good for you to even put a number on it to go, look, once you get to that 50 to 100 range, that's where it starts to make sense to start to be taxed as an S corp, because some of those tax benefits are huge, right? I mean, there's some big things there. Like you mentioned, even half of the self-employment tax, which is a big chunk of things. But then we also have a lot of people in the industry that are veterans, right? That have been at this for a really long time. That this is not new information for them, but it's still a good reminder that we have to stay on top of these things to track and organize. So you'd mentioned that tracking and organizing. What are some ways? What are some of the best ways for people to do that in their business? What are some of the best solutions or tricks that you've heard of or seen in the industry that would make the most sense?
If any of you are familiar with or already operate out of QuickBooks, I think QuickBooks is kind of the industry standard, if you will, from a tax standpoint. And I'm a big fan. There's a lot of ways that you can really grow with QuickBooks. But if there's anyone that's listening to this that is like my mother and doesn't want to keep track of anything, there's an app called Keeper. It used to be Keeper Tax. It's called Keeper. It's like $170 for the whole year. And the reason that I love Keeper is because you can tie together your credit cards, your bank accounts. And if Tyler, you and I were to go to lunch right now and I pick up the ticket and it texts me and says, Tommy, was that business related? I can just text back yes or no, and it'll organize it for me. So Keeper is a very easy way and a very inexpensive way. QuickBooks and a bookkeeper is probably a little bit more extreme for those of you that are veterans and have multiple streams of income.
Yeah, and at that point, I mean, picking the right professional is a big deal because they're not all created equal, and this is true. This is true of real estate, right? I mean, not all real estate professionals are created equal. Likewise with your tax professional, there's some that know the tax game really well, and you can correct me or jump in if I'm wrong on any of this, Tommy. But there's some people that know the tax game really, really well and are really good at caring for your money. Like you said, you don't care. Nobody cares about your money the way that you do. But a great tax professional costs money, but saves you far more in the long run. Am I right?
There's a big difference between tax planning and tax filing. And if all you're doing is hiring someone to enter the numbers, to file the taxes, there's not a lot of strategy that's going to help you understand going into the following years how you're going to benefit your own situation. When we talk about tax planning, at the very least, having a once a year meeting or a quarterly meeting that says, hey, you're making enough money, it probably makes sense for you to pay your kids, or it probably makes sense for you to invest into X, Y, and Z. Everyone's goals are so different that tax planning is extremely difficult. So what I would recommend to everybody, ask your accountant, how many taxes do you file for real estate professionals a year? Right? We file thousands a year. And what I love about that is I've got a big team of accountants and CPAs that get to work together and say, hey, look at what Tyler did. This was a strategy that Tyler used, and then he gets to go share it with somebody else. So are they working with a team? How are they getting ongoing training? And how many real estate professionals do they file on an annual basis to help you tax plan as opposed to just tax file?
So how often do you run into to real estate professionals and investors that are running multiple LLCs for their business? Because in my experience, sometimes you've got a real estate agent and they're running the agency side out of an LLC, and then they've also got their rentals run through another entity, and then they've even got property management through another. How common is it for people, and what are the benefits of multiple LLCs to manage your business and play the tax game right?
Yeah, great question. We run into it every single day. I mean, when you set up a business entity, you're really trying to accomplish three things. Number one is privacy and protection. Number two is tax benefits, profit and loss. Number three is showing yourself as a legitimate business, not only to your clientele, but to banks and lenders as well. So to give you an example, some of the investors that we work with, we oftentimes will set them up with a holding or a parent company out of Wyoming. Some of you may have heard this, but Delaware, Nevada, Wyoming, they have additional privacy and protection laws that other states don't offer. So I'll even just use myself as the example. I have a holding company that's based out of Wyoming. It doesn't do any business, but it owns my other businesses. So it owns my consulting business. It owns the tax business. It owns the real estate business. And depending on the line of work that you're in and how many businesses you have, you can ultimately do the same thing where you can't avoid getting sued. It's a very litigious society that we're living in currently, but you can absolutely make it more difficult on people. And you deserve to have the privacy and the protection as an entrepreneur in general, especially as an agent, a broker, an investor. Your name is out there in the open so much that if you were to go through some sort of a frivolous lawsuit, you don't want someone showing up at your house. You want them to have to go through the proper channels. So whether it's a holding company, whether it's a subsidiary, whether it's active or ordinary income as an agent, whether it's passive income for long-term real estate investments, those are all questions that we like to ask to make sure that people are structured according to what they're after.
So help the audience here understand what it is that Prime Corporate does specifically, because you're saying, look, these are the questions that we ask, but why is that relevant to the people that are listening to our audience?
So Prime Corporate, we really try and focus on, when we started Prime 10 years ago, we had the startup solopreneur in mind, the person that didn't want to go out and hire the high power attorney and the super expensive CPA. And we've obviously grown over the last 10 years to where we have people that have large companies at this point, but we help in really 4 primary areas. The first is entity structure, LLCs, S corporations, anything along those lines. The second, we have a really cool business credit development program that helps people understand how to build a separate credit profile for their business so that they can use business credit, let the business pay for itself, and then pay themselves from there. We also have a full team of accountants and CPAs for bookkeeping, tax work. And then we also have a full team of attorneys that help with estate planning, trust, wills, living wills, power of attorneys. I don't know if there's any wholesalers that listen to this, but they're looking at those probate lists and they know what a nightmare they are. And that's what we try and help people avoid is probate in general.
So ultimately, I mean, Prime Corporate, you guys are kind of the one-stop shop for all of that administration back end, really, that a real estate professional or an investor could use. Yeah.
We like to joke it's the stuff that you don't even want to think about, let alone do.
Or do a podcast about.
I guess. Yeah.
So that's awesome. I mean, my interactions with you guys has always been really positive, and that was one of the reasons why I wanted to have you on the podcast today, because this is one of those things that people tend to not think about until they have to, until they're forced to. And I would imagine that if our listeners have not started thinking about their taxes right now, it's because they're dreading the task a little bit. I mean, they're going to wait till April 1st, and then they're going to grab together everything that they can in the next 15 days in hopes of filing prior to the deadline or getting an extension. And so again, I mentioned earlier, there was a timeline on having this conversation because that's a crucial aspect of it. Is in this industry, we work hard for the income that we bring in, and it's important for us to hang on to all of that. So what are some other tips and tricks? Maybe what are some of the questions I'm not asking that you'd want the listeners to know, Tommy, about, I mean, anything. We've touched obviously really high level, and hopefully what we've done is we've made people think a little bit and go, hey, maybe there's a better way to do what I'm doing. Even if what you've been doing has worked for many, many years, there may be a better way to do it. And that's hopefully what we've made people think. But what are some of the questions that information you want to give that I'm not asking?
I'll walk you through one of my passion projects that I'm in the midst of building out right now.
Okay.
Everyone cares about their own financial picture, but I think that a lot of people also care about their kids and their grandkids and their loved ones and generational wealth. That when you graduate high school and you can do these math problems, and why don't they teach tax? Why don't they teach credit? And I've got one little girl and another little girl on the way. And I am very, very passionate about what I could do to help give her a leg up in this world. And one of the things that I'm doing is I pay my daughter $12,949 a year, which allows me to write that off. She doesn't have to file a tax return because she didn't make enough money. I help her understand how to invest that into a Roth IRA. And by the time she's 25, she'll have $1 million in that account. She could either invest it into real estate, she could start her own business, she could pay for college, she could buy a house, whatever she wants to do. But simultaneously having her as a co-signer on some of my credit, where when she's 18, she'll have an 800 credit score, 25, $1 million in an account. So a lot of you are service-based and help so many other people that the last people that you help are yourselves. It may be more motivating for you to help your loved ones and to help others, because that's naturally where your brain goes in this industry a lot of times. And if you can help yourself, you're going to benefit others around you. And paying your kids is not only an excellent tax deduction, but it's a great way to shelter some income and give them a leg up long term. So it's going to be a real cool YouTube series that I'm going to put together. I'll make sure to get it to you. We'll do podcast number like 587 or something like that, around that.
Nice. So, and what you're talking about, because I know that some people are already practicing this, and then there's going to be some people that this is brand new. Correct me if I'm wrong. I think this is called child tax arbitration.
Yep.
But I believe that for 2023, that the amount is actually increasing to 14,000. And don't quote me on that. I think that it's increasing this year, but this is an excellent way for you to reduce the amount of profit that the business has made, and that money go into your family's pocket. Granted, it needs to go to your children, but like you said, to be able to pay $13,000 to your daughter every single year, and then use that money in a way that benefits her long term is hugely beneficial, and for her obviously, but for the business as well. And so this is not like some sneaky tactic. This is what a great tax professional would help you do in your business, as long as your entities are structured correctly, and as long as the income is there to be able to do something like that. And correct me if I'm wrong, Tommy, but this is what a great tax professional would help you do. And where, like you said, planning versus filings, a great tax planner would help you to do. Would be able to go, look, let's set aside this money for your kids this year, and minimize the tax liability for the business while still benefiting your family.
The more money you make, the bigger the problems become from a financial and from a tax standpoint. And they're good problems to have, don't get me wrong, but if you're not planning for those things and tracking those expenses, you're going to be caught in a position that you don't want to be in. And there's over 70,000 pages of a tax code. And there's so many tax codes that are such a joke, but they're there for the taking. The Augusta rule is a great example of being able to rent your house out to your business up to 14 days a year and writing off the expense while not claiming the income. Right? Cost segregation studies for all of you that have investment properties or plan on having investment properties. We have a client that we saved $700,000 on their tax bill by helping them understand cost segregation studies. We have another client that purchased a jet and saved $3 million by buying a jet, renting it out, and making $40,000 passive income monthly from the jet. Like, the more money you make, the more exciting these problems become. And even though those are higher level, if you understand them from the very beginning, it's a lot easier to grow into them than trying to backtrack over time.
Yeah, and I think that's maybe one of those valuable things that people can take away from today's podcast is that it's never too late to start. It's never too early to start. And so understanding those things right away from the get-go can benefit you in the long run. And while it may be nominal margins in the beginning, the difference between tracking and managing your expenses one way and using a professional. But as you grow your business, which is everybody's intent, nobody wants to consistently make $45,000 a year. We want to grow every single year in our business, especially in real estate. It's one reason why we use real estate as a vehicle for income, is because there's no limit. And when you do get to the big dogs, the big leagues where you're playing, with big money, it makes a massive, massive difference. I was laughing because you said we saved one guy $700,000 on his tax bill. And I'm going, I know people in the real estate space. I know REDX clients. I know people locally here in Utah where we're at, where those are the kind of numbers that their real estate business is bringing in. And those are the types of numbers that's where it really matters. And so it's never too late. It's never too early, I think, is a really important principle for people.
one of the things that we really try and just drive home to, it's not about where you are right now. It's where you're going to be in 3 years, 5 years, 10 years. And we help people build a separate credit profile for their business where, like your FICO credit score, you can build a PayDex credit profile for your business that your business self in 5-10 years is going to be grateful you establish that line of credit, where if you get into flipping, for instance, or those of you that are already flippers and you want to go into a property and redo the kitchen and a couple bathrooms, I'd much rather use business credit that isn't tying up my capital at a low interest rate. Let the business pay for itself when the property sells, and then pay yourself from there. All your expenses are tied with your business credit, and the financial liability is also separated as well. So once again, long-term understanding this realm of business is not going to lead you astray.
Yeah, and a good thing to point out, especially related to business credit, is it's not an overnight thing, right? It's about building. It's about growing something. And so I like what you said. 5 years from now, your business self will be really grateful if you practice some of these principles now. So last question here, because I think we're about up to our spot here. But if people want to learn more, what do you recommend?
Yeah, we're happy to talk to you. I mean, what we'll do is I'll get you over a link that maybe you could put in the show notes, and feel free to click on that link and schedule a call for yourself. We offer free 45-minute to hour consultations that if you're brand new, tell us you're brand new. If you've been in the business 20 years and have 300 properties, whatever that looks like, get the most out of that call, but feel free to schedule a free consultation. And if there's any areas that we can help you with and bring value, we offer the free consultation because we know you have to file your taxes. You should be structured as a business, and you probably want to build business credit. So if we can bring value to your life and bring value to your business, hopefully we can earn your business over time. And I'll get you a link. You can put it in the show notes, and anyone that listens is more than welcome to schedule a call to speak with our team.
And on top of that, if you've got a great tax professional that you're happy with, never hesitate to ask questions to them as well. I mean, if you've got somebody that you've been working with and they know your business, it never hurts to ask and go, hey, what about this? I heard about this. Are we doing this? What else can we do? Those types of things. But Prime Corporate is a really good solution for some of this information. And like Tommy said, a free consultation to figure out if there's anything they can do to help your business. This is important, and we felt like this was a valuable thing, a valuable topic for the podcast today. It's definitely different than typically what we're talking about, which is the tactics on how to grow your business. This is more the back end, like you said, the stuff that we don't ever want to think about. But it's crucial. And so, Tommy, thank you for taking time out of your busy day. I know that you're on the road a lot, and so we were able to make this happen. I'm super grateful for that. If you'll send us a link, we'll make sure that our listeners have access to that. Anything else that you'd want us to know before we wrap up?
I think that's it. Thanks so much for having me. If there is anything in regards to the entity, the business credit, like I said, just make them aware when you schedule a call. Prime Corporate Services on Facebook, Instagram. We try and put out a tax tip of the week just to keep you thinking about taxes and keep you thinking about us, I guess. But other than that, thank you so much for having me. It's been fun, and I look forward to continuing to connect.
Thanks, Tommy. And as always, everybody, you can find our previous podcasts on our website, redx.com/podcast, or on any of the platforms that you like to listen to podcasts on. We're there. Be sure to track us down. As I mentioned, this is episode number 227. So there's a tremendous amount of information for you to catch up on if this is your first time here with us. If it is your first time and you want to get updates on future podcasts, we do these every Thursday at 1:30 p.m. in the afternoon, Mountain Time. And you can subscribe to get those updates. Just go to redx.com/podcast. There's a spot for you to put in your email, and we'll send you updates and keep you up to date on the guests, the sizzle reels, the highlights, all the really good stuff that we have here. So, Tommy, thank you again for spending time with us. Again, this is such a fun thing that we do here at REDX. I love doing the podcast. Any feedback that you have for us, please let us know. Thanks so much, and have a successful Thursday.